Hello guys and welcome back to the channel. So today I want to talk to you about the investor call that Rocket Lab had about their latest SDA contract where they were awarded $515 million and they had an investor discussion about this. So I want to tell you my thoughts, what was my key takeaways from this and how the stock market reacted and if that is warranted or if that is insane and if that presents an opportunity for us. So please make sure you hit the like button and you subscribe to the channel if you haven't, and let's go. So Rocket Lab held a conference yesterday around the same time as I'm recording this video, and I was live streaming it with Dave G Investing, and we didn't really, or at least I didn't really understand why they needed to do this investor call, because they have an earnings coming up, and I thought that they maybe have some special announcement to make, because it didn't make sense. So at the end of the event, I came to the conclusion that probably they didn't think that the stock market reacted well enough for the contract, and they wanted to explain a lot more to the investors what this means and what kind of doors it opens. And the investors really got it, because today, the day after, they sold off the stock 1.8%. What the heck? So I want to go through with you my key takeaways. I have taken some notes here. So basically, they are saying that this contract is a generational opportunity for Rocket Lab. And I mean, those are not small words, they're quite big words. So if I believe it was Adam Spice, the CFO, who used this, he said that it's a proof of concept. So basically, Rocket Lab has been using their hard-earned cash from the SPAC, which we are very afraid if they're using it, right? Because if they use the cash before they're profitable, it takes away their runway, and they might run out of money fast. And they use this money, or faster, and they use this money to acquire space manufacturing companies, to diversify the company so that it's not only a launch provider. And this contract was a first proof of concept that this was the correct step to do, because they basically secured all the key supply chain elements of making satellites. And this government entity actually really wanted to have the schedule security, and Rocket Lab had basically a key role, or they were basically able to guarantee the time with very high certainty because they own the supply chain, and this is why they got the contract. So it clearly shows that the company is on the right track. So then another thing that is very interesting is that this contract that they got awarded, it has several next tranches, and they are competing on those tranches. So there may be follow-up contracts that are coming from this. When people ask them about the gross margins, the CFO gave a very long and political answer that I'm not sure that I understood. He was talking about how they're modeling different things, and this is exactly as they modeled it, which is not an answer to the question. What I understood from his answer is that these bigger contracts, they come with a lower gross margin, of course, because you give a better price to attract these customers. But it's still according to their plan, and I think it should be over 30% gross margin, because that was their plan. So I hope I understood it correctly. Then he said that this mission is more linear than the Global Star mission that they have. So that means that instead of having expenses upfront for year 1 and year 2 and then recognizing all the revenue in year 3, it's more linear. So meaning they will be able to recognize more revenue upfront, but it's still backloaded. So as we get closer to the completion, they will be able to recognize more and more revenue, which is very, very interesting, because they gave a very good Q1 guidance. And if this contract is front loaded, then the very good guidance came from something else. So it's food for thought there. some analysts asked them how much capex is needed, and Adam Spice said that it's very little capex that is needed because they recently bought a lot of facilities and they pretty much have everything that they need. And then the next analyst asked the question, which was key, my biggest takeaway from this, and he said they asked him that are they expecting to receive any other similar contracts, and then Adam Spice basically said that they don't comment on this, but he can say that they are in competition on several similar and even larger government contracts, so both government and also both commercial, meaning similar and bigger, which is fantastic. So this might be the first of many such contracts to come, and I don't know what that will do to the stock price. It will. I think that the next contract, if they get a similar such contract, I think that will make them cash flow positive, and that is just nuts if you think about it. So then Adam Spice said that they were focusing on the government contracts because no financing is needed for the government contracts, because if they sell commercially, the equity markets haven't been doing so well, and I guess that those big companies need to get financing and the interest rates are up, so they felt that it was better to focus on the government. And then he made a stab at maybe Astra and maybe relativity space when he said that focusing on the backlog is for the companies that haven't delivered yet, and the mature space companies, they focus on what they delivered. And I guess that's true. So for example, if you're Tesla, you're not focusing on, we have 2 million Cybertruck backlog orders. You're focusing on like how many Cybertrucks are you going to get out in 2024. So that was a funny stab at other space companies. Then somebody asked them, an analyst, if they think they got this contract because Neutron, and Peter Beck said that no, Neutron has nothing to do with them getting this contract. However, they really hope that Neutron is going to be ready by the time these contracts are ready, because then they can compete in basically being the launch provider. So that would be very, very good. And then they asked Peter Beck if there's going to be more acquisitions, and he said that they will be very strategic about it, but there might be some new acquisitions. So that was the investor day. They really, how other companies are using the name AI on earnings calls, and on this investor call, they were using the word prime. So they are a prime supplier now to the government, and that comes with a lot of prestige, that comes with a lot of trust, that comes with a lot of big contracts. And I think they should have set like a timer on the bottom of the stream to, every time they use the word prime, it goes over 1. So I really got it. Rocket Lab is a government prime supplier now, and they are not a launch provider. And I thought that this was really, really bullish, and the fact that there is more contracts in the works, again, I think something that weighs on the Rocket Lab share price very, very much is this question mark of, are they going to dilute the shareholders? Do they need to raise more cash? Are they going to run out of money? Because, the interest rates are very high and it's not so favorable to get new financing. So if that dark cloud would go away, I think that the stock could... Okay, I don't want to make predictions. All I can tell you is my fair value for the stock is between $6 to $8, and we are 5.5. So we are way below fair value. So for me, it wouldn't be unreasonable if the stock would go up to 8 if this black cloud about the financing would go away. So where are we in terms of the stock? It's very, very interesting. I wanted to show this to you guys because it's quite insane. So this is the stock chart of Rocket Lab, and this is where we had a failed Electron launch. So the failure happened on September 19th, and this is the day before. The stock price was at 508, or in this range, so just over 5. And what happened during this period? So we went back to launches. They corrected a very freak mistake on the Electron, so the Electron rocket became better. They guided for this launch manifest in 2024. I'm just gonna make myself a bit smaller so you can see me. And this launch manifest is more than doubling of what was in 2023. So insanely good, okay? Then they normally only guide for the next quarter. This time they chose to also guide for the quarter after, so Q1 2024. And this guidance is almost 100% increase compared to Q1 2023. So insanely good guidance. Then we go back to launching here, and the answer to us going back to launching, which again starts off this period of 22 Electron launches in a year, starts off this insane Q1, or gets us closer to there, and the stock market answer was a fall bigger than the actual Electron failure. So the Electron failure was a fall of you can see it up there, 7.54%, and this one was a 10.83%, and the price came below, slightly below, but below to where we were when we failed the launch. It doesn't make any sense whatsoever, okay? Then we go towards Christmas, and then they get this magical contract, and I think that the importance of this contract is not recognized by the stock market. We get a 22% boost, which is fantastic, but it only lasts us 6 days. So after 6 trading days, we are back to where we were before we went back to launching the Electron. And again, keep in mind the changes that have happened, the new launch manifest, the Q1 guidance, all these changes. And now, then we have a nice increase, and then we hold this investor day, and the stock market's answer to that is minus 1.8%. It doesn't make any sense. And I think opportunity is in the stock market is, when stocks are misunderstood, or when, for example, when a company is at a certain price and then the management is executing flawlessly, but the stock price doesn't go up. And I see something like that because we are at this level, we are almost where we were when we failed the Electron launch, like the day before, right? And if I look at all the changes, this is a completely different company. The risk level of the company is different. Their growth level is different. The contracts that they're competing for is different. So I am out of money, couldn't buy more stocks. The only thing that I could do is I sold some puts to benefit more from this. I saw on Twitter that a lot of people were adding to their position, which made me very, very happy. And all I can say is this doesn't make any sense. My average price is 422, and I'm a very, very patient investor, but I'm really, really liking what I see in terms of execution. So let me know in the comments what you guys think. Thank you so much for watching this video. If you got value out of this video, you could check out the Patreon link in the description box below to support the channel. And in the future, my plan is I will upload all the thesis of all the companies that I'm working on. You will be able to download my valuations and then, put in your own assumptions, play with the numbers. There will be some other cool things that is coming. So if you join now, it's purely to support me and support the channel, which I thank you so much. And yeah, future goodies is coming. Thank you so much again for watching, and I'll see you in the next video. Ciao, ciao.